two things I would say. One is there are obviously OGs or old hodlers that are going to sell something and, buy a house, maybe enjoy life a bit. So there will always be some coins that are sold outside of the mine supply. But there's also roughly 2 million coins that sit on exchange for market making, trading, and arbitrage. And those 2 million coins, it's dropping obviously. Now it was at more than 2 million before, but now it's at, around 2 million. But that is enough for the coins to drop the market. And a lot of it has to do with Bitcoin being a 24/7 market as well. So this drop, I believe, is related to the tariff war. American, Canadian, Mexican, well, we're all going to tariff each other. And it's just panic. So Bitcoin being the only 24/7 liquid market is the only thing that can react immediately. So it's sort of like the market sentiment is taken out on Bitcoin. We're the first to move, the most volatile and the biggest move. And then the equities markets and everything else follows after that when the markets open. Such an antiquated concept, right? But that's what it is. But going back to the point, those 2 million coins is enough to move the market a little bit. And the impact of those 2 million coins, I believe, is becoming less and less pronounced as we increase hodlers. So if you break down the schema of who impacts Bitcoin price, you have the hodlers, zero impact. They're just sitting on the coins. And in ways you can look at it, they're coiling up that spring. Then you have the buyers, the people that are DCAing either like by day or by month, or you can say MicroStrategy is also in the DCA category, and hodling, but they're actively in acquisition mode and Metaplanet. And like you said, then you have the traders, which is kind of that 2 million coins. So that is kind of what is driving the market. And Bitcoin will always be volatile because you have that slush fund of coins on exchanges. But that is going to be drained over time. And we do see that. And it makes it more pronounced, the coil up effect from the DCAers and the hodlers.
So what's really interesting about El Salvador is how much it's been focused solely on Bitcoin. It's like it's resisted that. How come?
I think President Bukele is a Bitcoiner. Trump is not a Bitcoiner. He spoke at, Nashville conference, but he's not a Bitcoiner. He's done a lot of other crypto-related projects, and I don't think he fully understands Bitcoin, and you can kind of pick that level of understanding out from his speech. If you compare his speech to RFK's speech, it's a world of difference. So he's more crypto, right? And that's probably why the US is not as Bitcoin maximalist as El Salvador is. So we'll see how things go over time. But there are a lot of lobbying groups in the US, obviously, too, exchanges that are trying to push them towards, crypto. And if it diversifies the reserve, that's probably why.
So recently the IMF and El Salvador reached an agreement so that El Salvador would receive a loan. And I think a lot of people are seeking clarity in terms of, is Bitcoin still legal tender in the country?
Yeah, so it's confusing. And I would say the breakdown is this. It's a glass of water. It's kind of at the halfway mark. You can look at it as half full or half empty. So the Bitcoin law has been softened, or you can say neutered a bit. They've amended it to comply with the IMF agreement, almost to the letter. So everything they said in the IMF agreement, they've amended it. But I think the key thing is the amendments leave the door kind of open. It's ambiguous. So there is still a Bitcoin law, but Bitcoin is no longer a currency. And it is legal tender, but it is now voluntary. So what does that mean exactly? It means Bitcoin is legal tender. There's no capital gains tax still.
Okay.
There's another line in there that says you can use Bitcoin. The government can't now. So there is this Bitcoin law. Bitcoin is legal tender. But what is a legal tender without enforcement? Not that there was before. It always has been voluntary. So you can look at it both ways. Like, some people are reacting very strongly and saying, they capitulated, they bent the knee to the IMF, and, Bukele sold us out, and they're very disillusioned. And then you have the promoters of El Salvador and Bukele, and they're saying, yeah, we won. We're gonna take the money and buy Bitcoin with IMF money. But I think the truth is somewhere in the middle. There was a compromise. There was adaptation. The law itself is weakened, but Bitcoin still has a standing here in El Salvador. So you take the good with the bad. And I think it makes sense in the long run. Bukele is not the president of Bitcoin. He's the president of El Salvador. I mean, he has to do what he thinks is the right thing for this country. And if he thinks the right thing for the country is to secure the IMF loan, which will lead to other loans, then that's the way they should go.
Before I ask you about Jan 3, do you believe that this was a setback for nation state adoption?
It's to be seen.
Okay.
It's to be seen. It's not really a setback for nation state adoption. I believe nation state adoption has already taken off. So once El Salvador made the move, we started going forth. I started Jan 3. I brought on a lot of amazing people to the team, and we put together this network of people going out and engaging. We've met with the president of Madeira. He said, I'm going to make Madeira, a place for Bitcoin.
Because I think a lot of Bitcoiners expected that in the developing world, you're going to see massive adoption of Bitcoin as people sought non-sovereign alternatives because their local fiat currencies were so terrible. But I think what we saw instead, what the market is telling us, is we're seeing this massive adoption of stablecoins.
Yeah.
Specifically stablecoin Tether, like the dollar stablecoin.
Yeah.
I think it's quite interesting. I think a lot of Bitcoiners didn't expect that. But, being from Latin America myself originally, I think for a lot of people, it's hard to understand that they're just trying to get by.
Yeah.
Right? They don't have the luxury of being able to save.
Yeah.
So just having a currency that is stable, that they can earn in, is a massive upgrade to, where they could have been before.
Yeah. I think it comes down to Alex Gladstein's book title, Check Your Financial Privilege. A lot of Bitcoiners, especially really hardcore maximalists, are like Bitcoin and nothing else. But you have the luxury as a Bitcoiner in the West to buy Bitcoin. A lot of people are just trying to earn a living and get by. They may not have a bank account. They can't get a bank account because they don't have an address, and they're excluded. The financial system is a two-tier system. People can get in and people cannot get in. That's it. And it's engineered that way, and it will always be that way. The only thing that can break that system is Bitcoin. So the reason why people are seeking Tether and stablecoins is because they need access to that system. They don't yet understand Bitcoin, but they do want the dollar to hedge, right? So if you're a merchant and you're selling stuff and your suppliers want dollars or Argentinian pesos, and you have Bitcoin, there is volatility in Bitcoin both ways, and we can't ignore the fact that some guy taking Bitcoin can lose a significant amount of money just by taking Bitcoin and not hedging, because that's not their savings. It's not yet really savings as long as there is volatility. It's savings for people that can weather volatility. People that can't, they need a stable unit. And Bitcoiners like to say, well, stable coins are not stable because the fiat money is devaluing, but compared to the Argentinian peso, the dollar is gold, right? Or compared to the bolivar, it's gold. And I think we just have to ignore people that criticize that and focus on onboarding these 400 million people to liquid Tether and Bitcoin.
Well, it's a stepping stone.
It is.
And then there's another part. It's an interesting phenomenon too, because as Bitcoiners, shouldn't we be free market maxis, right? And the market is telling us, right, that the developing world, massively in Latin America, they're really interested in getting a dollar rather than, Bitcoin. I think it's an educational thing. I think it's a survival thing.
Yes.
I think it's like the principle, like the hierarchy of needs, right? Like you just need to be able to survive, and then you start thinking. And I think it's a Trojan horse because it gives people essentially the ability to custody dollars in their mind on a digital wallet without having to go through a bank account. And then eventually they're going to come to the conclusion that all of us have had in the West, which is like, the dollar is a scam too.
Yeah.
And all roads lead to Bitcoin. Now, you said that Jan 3 focuses on hyperbitcoinization. What is that?
Hyperbitcoinization is the point at which we no longer convert Bitcoin into fiat. There's only Bitcoin left. So it's the end state, really. And you could say it's hyperinflation of the dollar, really. Right? When the dollar hyperinflates, then no one's going to want the dollar. They will just want Bitcoin. So yeah, it's the greatest demonetization event in human history. Basically, all fiat will die all at the same time, very rapidly, and everyone just wants Bitcoin and transacts in Bitcoin.
Really? It's just, so you don't see a world where the dollar and Bitcoin can coexist?
I don't see it, but a lot of Bitcoiners do see it. I think Saylor is one of those. Like, If you look at his Bitcoin 24 model, right? He actually tapers off the model after a number of years to kind of slow the death of Bitcoin, slow the death of fiat. So Bitcoin growth tapers off. But I think monetary systems, especially when you're dealing with 100x improvement over the old system and even over gold, it's not a gradual taper. It's just a flip of the switch. Everyone's just going to switch to this new thing. I don't see that happening in Bitcoin, and we didn't even see that happen with the devaluation of the German mark. It wasn't that it slowly tapered off, and there was one baker in this village over there that was still taking the mark, 5 years later, because that network effect of that money dies. So maybe some people have it in a drawer, but no one's actually going to exchange anything for the mark.
I mean, that's going to be a pretty big impact on the world, right?
That's why we're working on getting Bitcoin adoption out there as fast as we can to soften the fall.
Okay.
It's like the Foundation series, right?
Yeah.
You can't stop the fall, although we can soften the fall.
And it's going to radically change the world. And before I get to that, like, what are the implications of essentially fiat ending? Because it's going to be essentially a change in the balance of power between the state and the individual. And I think there's very, very deep implications there. But what do you think were the motivations behind the IMF asking for those concessions from El Salvador? Are they scared of Bitcoin, Samson?
I think the IMF is definitely scared of Bitcoin because they are a fiat organization. For those people that don't know, they have their own shitcoin. It's called the
SDR.
Yeah, SDR, Strategic Drawing Rights, which means they can just kind of print their own money out of thin air too. But with Bitcoin, they're irrelevant, or they need to adopt Bitcoin. It's their choice. Either you adapt or you die. But I think there's another darker angle here, which is they're basically a loan shark. Their job is to lend money in perpetuity to countries like El Salvador and developing places around the world. And this kind of puts them out of a job. So I think they had to fight for that, or they wanted to save face, because remember, they made a big stink about all the Bitcoin adoption in El Salvador, that, you're going to fail, it's dangerous and whatnot. And when they're wrong and they're incorrect and the metrics prove them incorrect, vastly incorrect, I think they need something to save face. So maybe they insisted on these concessions just so they can say, yes, we got something.
Yeah, it definitely felt that way. It definitely felt that way because it was like, haha, we won. But it's what you said with the analogy of the glass, right? It really depends on how you look at it. But the most important aspects, there's no capital gains implications.
Yeah.
You could still use it as money. They're still buying it as reserve. So did they really win, right? It's like an optics. It was for the optics more than the substance.
Yeah,
from my perspective.
And as you said, it doesn't really matter because that's kind of government top-down adoption is icing on the cake. The real important part is the grassroots adoption. And I think that still needs work too. We should not be lying to ourselves and say, yeah, it's perfect already. We've got, educational initiatives and we're good here. There's still a lot of people here in El Salvador that have no idea. And we still have a lot of work to do.